The whole digital system, the SDR stands for Special Drawing Rights, and it's a currency that the IMF created back in 1969. But it was created in 1969 to take over as the world reserve currency at that time, away from the US dollar. Having the title of the world reserve currency means that if you are a government or a corporation, as well obviously as an individual, that is going outside of your borders to do anything, you have to use that currency. So the US has held that title for, well, since Bretton Woods in the 40s. When we transitioned off of the gold standard in 71, that's why the SDR was created, was to take over. But Henry Kissinger went to Saudi Arabia, created the petrodollar, and so the US retained that status. It's a huge advantage. It is why we are, we're losing it, but why we are the global financial leader. But that also gives us a lot of control over every other country, because they've been forced to go through the US SWIFT system in global transactions. Now, once the SDR becomes the world reserve currency, that would change a lot of things, because unlike the US dollar that's created from debt, the SDR is a button push, and there is no additional debt to the IMF, the International Monetary Fund, created. That's why you may hear, well, they have the cleanest balance sheet. It is kind of logical that that would take over as the world reserve currency. Is most likely to happen, quite honestly, is that without realizing it, people will spend any equity that they own in anything or in everything. And because the SDR is a much broader global currency, because it's a basket of currencies, that means that wealth and money can transfer around the world a lot faster, a lot easier, and you don't really even know who's picking up the equity in your house. They've been moving us in this direction for a very long time, and it's called nudging. That's actually the formal term for it. And just like you didn't really realize that, because I could tell by your statement, we don't. It's almost invisible. So therefore, what they're saying is you are volunteering your wealth. Okay. So what it looks like on the other side of this is really very much like a medieval setup, where you have just the few that own everything and the masses that own nothing. Now, are they happy? I don't think so, because you also have no freedom. And that's really what physical gold and physical silver are. It's their freedom, because they're real money. And they don't need any government or central banker to say this is money. And it's money because they meet the criteria of good money, and they have the greatest functionality of any asset because they are used across the entire global economy, every area. So therefore, you 100% of the time, there are always the broadest base of buyer. Now you tell me what other asset class can say that. I would be really amazed if any of your viewers actually thought that what they were watching in the stock market, if that was about supply and demand, were just massive amounts of money being printed in. And people get caught up. So if the prices go up, then they go, oh, this is a good thing. Look at, I'm making money, except that the value of the money goes down. And so if they can keep people inside of the system that they easily control, when they collapse the system, and, you know, people think that they would never want to do that. Yeah, no. They do want to do that because they know that they're transitioning. If all of your wealth is held in intangible digital form, when the system collapses, you lose everything. That is why you have to actually have real hard assets, physical gold, physical silver, outside of the system. It's the only thing that's invisible to them. And it's also the only undervalued assets that are out there. So at some point, logic comes back into play. And when that happens, you darn well better have some physical gold and silver, as well as food, water, security, the barterability, wealth preservation, community, and shelter. You need to have these things so that you are as independent as possible, or you have to dance to their drummer. And their drummer, their contracts, what they have in mind for you could be very different than what you have in mind for you. Well, I can tell you this, whether it happens, whether it doesn't happen, a truly diversified portfolio actually has some tangible wealth in there that is easily movable. I mean, certainly this house is a tangible asset, but I cannot put it on my back and move it. Whereas with an ounce of gold or an ounce of silver or a collectible coin that's worth more than an ounce, I can put that in my pocket and I can take it anywhere that I want to take it. So I would say that even if you're a naysayer, booty hooty Rudy Manooty, you own gold and silver. I mean, what's wrong with that? But every time a central banker comes out and says, we need inflation, what they're telling you is that the currency, the fiat currency, the government currency is overvalued and they're taking it down. And if everything you own can only be converted into that currency, well, then let the stock market go to 10 trillion. Because the last time I checked, 10 trillion times zero was still zero. So we have this little window, I think, that we can continue to get ourselves into a position to be as independent and self-sufficient inside of a community. I'm not saying you have to do it all alone, but outside of the current system that we're in, we have this little bit of a window as they continue to make this transition. What could derail their plans could be a complete loss of confidence in the government bonds. That's why interest rates and paying attention to what's happening with interest rates are so critically important, because the fact that the 10-year bond, which is the foundation of the global financial system, has been rising, could be troublesome. You know, they're going to have to keep that tamped down, because once it reaches a certain level, it could be 2.5%, it could be 3%. I'm not really sure what that level is going to be, but there are a whole lot of contracts and derivative bets that are just speculative bets that can start to blow up, and the central banks could lose control.